Kitco Mining's special coverage of Mines and Money in Miami, Florida, is brought to you by Gold Shore.
Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2025 Mines and Money event in Florida, in Miami. We're talking about copper and gold today, and joining me is Rob McEwen, Executive Chair and Chief Owner of McEwen Mining. Rob, welcome back to Kitco.
Thank you, Paul.
Let us start at the top with the big picture. Where are we in the commodity cycle right now? You're active in the gold space, you're active in the copper space. Both the prices of both metals are doing very, very well. Where are we, do you think, in the cycle?
Right now we're at the bottom of the cycle and it's ascending. Commodities relative to financial assets are at a 10, 12-year low, and they go through these cycles, and I'm expecting higher prices in both categories, gold and copper.
So there's a lot further for the metals to run?
Yes, a lot further.
What do you think will be some of the drivers that are going to push them to higher levels?
Probably the biggest driver right now is geopolitical tension and customers looking for where do they source the material, and that's changed significantly with the geopolitical tensions. The other is there's been an underinvestment in this sector, so production is well behind in terms of being able to supply the projected demand, and weakness in fiat currencies.
Okay, looking at the issuers, the gold companies, the copper companies, it does seem to be a little bit of a strange moment in time. Recent years we've seen quite a bit of consolidation at the top of the gold sector. That seems to have sort of leveled off or plateaued out for the time being. In the copper sector, there's been some mega mergers proposed that haven't really sort of come to fruition. Do you expect there to be more big consolidation, and if so, what will it take to get there?
The gold price has been creeping up, and you're starting to see the market pay a little more attention to discoveries. I think once we burst through $3,000, you're going to see a lot of people coming into the space, and the larger companies saying, well, where do we get additional resources and production? And in the mid-tier, there'll be more consolidation as in the juniors. I think there'll be a lot of juniors that people are going after.
In the copper space, you're getting sort of closer to the point where you're going to build out the Los Azules project in San Juan in Argentina. But in the copper space, the bigger companies seem to be holding back from buying smaller companies, preferring to invest billions of dollars to expand their existing operations. Why do you think they are reluctant to be buying up other companies?
Some of it might be the time to bring a project on. The permitting process has really extended the timelines for bringing a project up. So if you had the choice, of going out and expanding your existing operation where you know you can get the additional production right away, I think it's an easy choice right now to expand existing rather than buy new. But that'll change as the prices improve.
Okay. Now, you recently announced that you have formally applied for Los Azules to the development project to qualify under the RIGI beneficial taxation regime in Argentina. If accepted into the RIGI regime, what does that mean for McEwen Copper? What does it mean for Los Azules? And let's broaden that out. What would that mean for Argentina?
Well, it would mean that the Argentinian government did the right thing. It attracted capital. For us, it would be an increase in our net present value by a third. So we'd move from 2.9 to 3.8 billion. There's a reduction in the tax rate, the removal of foreign controls, a 30-year stability agreement on tax, a number of other benefits. And for us, it's very positive. And you saw right after it was announced, the BHP came in, did a deal with Lundin for $4.5 billion. Rio Tinto stepped in with a $6.7 billion investment in lithium. It's serving its purpose to draw capital to the country, and they want more employment, and they can see long-term employment with mining.
You have a feasibility study underway, or you'll have a feasibility underway for Los Azules. Will that include the economics under the RIGI regime, or will you sort of provide both scenarios, with and without?
You have to apply for RIGI, and then you have to be accepted. So if we're accepted, by the time we get our feasibility out, it'll be included. If not, well, then we'll have to wait for that as a follow-up announcement.
Okay, and being accepted into RIGI sets the clock ticking. You'll have a certain timeline to start making the investments to build the mine, which is, what is it, $2.5 billion capex for the operation?
Yes, and we have to start, you have to go into production within a few years of that approval.
Okay. Now, you're taking a very different approach to the development of Los Azules compared to sort of the projects we traditionally see developed. You're targeting having a more sustainable project, including architecture designed accommodation blocks that will later on become a hotel, possibly sort of post-mine use, renewable energy, renewable water sources, food production systems. In short, a radically different way of thinking about project development. Why do you think taking a different approach is so important in this day and age?
It goes back to the reputation of mining in the general public views it as a very negative industry for the environment. It's been unattractive, and you can see it in the number of students entering schools of geology, mine engineering. They're very, very low. So, one, you want to attract talent, and the talent pool is shrinking. But even more than that, you want the communities that are nearby, the province, the government, the federal governments, to look at something and say, I'm proud of that. It's environmentally sensitive, it's comfortable to work in, it's attractive to look at. What we're looking to do is create a jewel on the side of a mountain rather than a scar. We are going to dig a hole there, but after closure, there are multiple uses that we're planning for this operation.
I imagine there's, in some corners, there's perhaps some skepticism about this, and maybe even people are scared because it will change the way they will have to build mines in the future, raising the bar that much. When you talk with other mining company CEOs, what do they ask you? What do they comment about this?
It's different. It's, what's it going to cost? How much more is it going to cost? And I went, what is the cost of having the privilege of being able to build your mine, and let's call it social license? If you spend hundreds of millions of dollars exploring and getting to the point you want to build a mine and the community says, stop. Can you avoid that by making this earlier expenditure to make the project more acceptable to the community? And we have to tell the public that the modern world is based on everything that's coming out of the ground. But that's not taught in schools. That's not from kindergarten through to adulthood. Mining is bad. So we just have to adjust to the change. We have to all live in this world and be comfortable with it, not damage it.
To answer their question, Rob, will you make money on the project with this design, this concept?
We're fortunate that it is projected to be a low-cost operation, producing copper at about just over $1 a pound. There's about a 75% gross margin. So yes, we'll make money. We got 400 million pounds of copper a year. Revenue would be about 1.6 billion at current copper prices, and your costs are 1/4 of that.
Well, your timing seems to be exquisite. The copper futures are at $4.50, $4.80 a pound, with a supply deficit forecast coming in the years to come. The likelihood is that price is only going to increase. So bringing on a new mine into that environment would seem to be, you couldn't have timed it better.
Let's hope so. The market's very capricious, and there's cycles all the time. But no, it seems to be a good time. Demand for copper is going up, whether it's for data farms or the EV transition, and the lack of investment in earlier days.
Now, obviously, times weren't always as good as this. If we go back sort of 10 or 15 years, when the market went into a very long, protracted bear market, McEwen Mining was struggling. You were having issues at various of your operations. You had this Los Azules asset. There was no interest in copper. To what extent, or how close did you perhaps come to sort of selling the asset on, letting it go, to help McEwen Mining get out of some of its difficulties?
I had to hold back some of our people, our management and directors. We received several bids from majors when our share price was very low and our treasury was small. And I just felt I'd look at this deposit and I say, we've got 37.6 billion pounds of copper. What would that be if it's a gold deposit? Because my background's gold. And I went, you take the gold price, divide it by the price of copper, and you come up with a product that is equal, the number of pounds of copper equal to 1 ounce of gold. Well, this thing is bigger than a 50 million ounce gold deposit. And the cost projected to be, $700 cash, all in, $1,100. And I'm going, this is one heck of a big gold deposit if you look at it that way on a gold equivalency. I'm not going to sell that. It's valuable. So these people came in with offers and they're just dangling it out in front. Grab it, you need money. I said, get out of here.
I guess it's one of the benefits of being chief shareholder. You have a bit of clout. Okay, let's talk about something else. We're here at an investment conference. Obviously, there's mainly juniors here. I think you're probably the biggest sort of company here in many ways. You personally invest in other juniors, and here at Mines and Money, for example, is Borealis Mining, a company that you've invested in, that you're a shareholder of. You have, over your career, Rob, you've continually tried to break the mold of how things are done in the mining sector. Your plans for Los Azules is obviously a shining example of that. I would argue that another mold that needs to be broken and changed is how companies market themselves and engage with potential investors. I interviewed Borealis Mining CEO Kelly Malcolm yesterday, and he is one of the few CEOs I've spoken to that seems to have genuine enthusiasm and excitement for what they do. You are another one, by the way, Rob. And if a CEO isn't genuinely enthusiastic about what they're doing, how are they going to excite someone to give them a check to buy their stock?
It's an excellent question, and they all should ask themselves that. I remember in earlier days when I was running Goldcorp, the majors were hedging their gold production, so fixing their forward price of sale. And I looked at it and said, they'd come out and they'd talk about, in glowing terms, about the future of gold, and then they'd say, well, we've just hedged all our gold. Barrick was a classic in there. And you go, well, wait a moment. Your words and your actions don't match. You're saying gold's going up, and yet you're going to hedge to determine what your future price is, sale price, and it's below where the gold's going. Why do I want to listen to you? You want to have some knowledge of the market. You want to be acting in the same way you feel the market's going. You need enthusiasm for this business. You have to be an optimist.
Oh, definitely. I want to take your hedging comment a little bit further. I completely agree with you, by the way, but taking that a step further, if you are a gold CEO, you're positive about the future of gold, why don't you hold some gold on your balance sheet? Why do you sell it all and convert it into cash?
Great question. At Goldcorp, we had a mine that was very low cost, and the government of the region we were in had said they're lowering the tax rate over the next 4 years by 6%, and I had a positive view on gold. So I said, why don't we hold back some of our gold? My largest expense is income taxes, so if I hold the gold, I can increase my financial assets by the reciprocal of my tax rate and just hold it, and if I need the cash, well, I could borrow against the gold on a pre-tax basis because I haven't sold it. And I could, if I really needed it, I could just sell the gold and it's 2-day settlement, or it used to be. Right now there's some problems in the market. So we held back 10% of our production, then 30%, and we had 200,000 ounces of gold sitting in a bank vault that we hadn't sold. And I think if a company is a low to medium cost producer doesn't have immediate needs for that revenue, they should be holding back some of their gold. If they're high cost, then it's a little harder to do. And that's why we haven't done it in McEwen Mining at this point. But you might raise money and just put it into gold if you have a positive view on gold.
It does seem a little odd that the biggest names in the space are sitting on billions of dollars of cash on their balance sheet, and they have done for a number of years. And just in the last couple of years, the gold price run up would have doubled the value of that cash or what have you if they'd have held it in gold.
Exactly. They're in the business. Why don't they live the business?
Yeah. Do you think that maybe a lot of the big companies, they talk about they want to attract generalist investors? Generalist investors look at the mining sector, they look at industrials, they look at food, they look at everything. And perhaps fair to say that the mining sector hasn't excited them enough so far. If companies did something like that, holding gold on their balance sheet, getting that additional gold price appreciation, that would be exciting, wouldn't it?
Either, yes, if they held on to the gold and became sort of a physical gold ETF, or they had a bigger dividend yield. The South African stocks, when I got into the business, were yielding 10, 12%. They were long life assets and attracted a large group of diverse investors.
It's interesting you mentioned dividend yield. We are in the midst of the 2024 financial results reporting season. A number of the bigger companies have now got an all-in sustaining cost margin in excess of $1,000 an ounce. Lundin Gold reported this morning their all-in sustaining cost margin is now about $1,700, $1,800 an ounce. Incredible. And yet, companies aren't increasing their dividends. Most companies are doing share buybacks, which I would argue is a bit of a sleight of hand in terms of shareholder returns. Again, if you want to attract investors, if you want to attract generalist investors, surely you need a more attractive yield than. One of the negatives of buying back your stock is your yield actually goes down. So going from an unattractive 2% to a really unattractive 1%, it doesn't really seem to be a good way of trying to entice new money to the sector.
I think the gold companies are just looking at a lot of the tech companies that went out, borrowed inexpensive dollars, and bought back their shares and created greater volume and pressure on the share price, upward pressure on the share price. So maybe they're just looking at a model that seemed to be working for another sector of the market and buying back.
I can see the value of bringing things in from other sectors, and as I mentioned earlier, you've done that at various points in your career. Getting back to attracting investors at a conference, for example, this is a very different vibe than if we were at a technology conference. What are some of the things perhaps that companies in the sector need to look at and borrow from the technology sector to create a greater level of excitement and curb appeal, frankly?
It's a very good question. You look at it and say, if you look around the audience, I'd say at a tech conference you'll see a lot of young people. You don't see a lot of young people here. You don't see people dressed like tech titans. You got to shed a jacket, put on a t-shirt, wear a pair of jeans. And there's just a level of enthusiasm. And what's exciting about mining, I often look at it and say, sometimes it's like watching paint dry. It just takes, the timelines seem longer and the potential growth prospects aren't as big. Like tech, you're servicing demands in the world. Here where you're expanding, but how do you show the growth that's occurring right now? Maybe we need more visual displays, more technology being shown in the shows. I can see a day when we're going to be using more robots in the mine and a lot more automation and autonomous vehicles. But we probably need more graphical depiction of that, more movement. Like in the media, the frames in movies. I grew up and there was a movie, Lawrence of Arabia, and the camels are running across the screen for about 2 minutes. And just now the frame changes are like 2 or 3 seconds. The mining industry is back in Lawrence of Arabia's time, running across the desert.
It does seem odd because mining is a sector that uses an increasing amount of technology in exploration, the various different tools for that, AI, automation you mentioned, drones, various different things. So it does seem feasible at some point, perhaps, mining companies or certain mining companies could legitimately rebrand themselves as technology companies.
Yes, fundamentals of technology companies. Again, I'll go back to my time at Goldcorp, my last year there. At our annual meetings, we'll invite all the people, a lot of the people in companies that service our company. And there were people using LiDAR underground or like a radar. There was a local church. There was the people who flew across and did topographical surveys. There were computers. And you had to go around, the shareholders had to go around to the meetings. We said we'd give away a couple of gold coins, but you had to drop into about 15 of these booths that were different businesses that serviced mining. And I think that was to try to help our shareholders understand all the diversity of skills that are brought to bear in this industry. Maybe we need more of that here, that there's booths around here of service providers and showing how they've advanced their business and how that is being incorporated into mining.
I think that there's some good ideas there, Rob, because the mining sector today incorporates skills pretty much from every occupation, including now space scientists and deep sea specialists.
Yes.
And everything in between.
AI is coming in and autonomous vehicles, and you just keep going on and on and on.
Well, there's plenty of food for thought there, Rob. Rob McEwen, thank you very much for joining us today.
Glad to join you, Paul. Thank you.
And we have much more to come from the 2025 Mines and Money Conference here in Miami, Florida, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of Mines and Money in Miami, Florida is brought to you by Gold Shore.